See, it's okay, well, I think it's true. But we're going higher. Look at that. We're going higher 100%. Okay, I think the live stream thing is working. I don't know. But we gapped down 1.4% just to only go higher. Okay, and we're still gonna go higher. Wow, look at it, bro. I don't know. I kind of feel like I'm missing this the trade for. I missed the whole move there. I was trying to figure out how to go get the live stream to work. We're getting the move higher over 686, 687. Honestly, could go quite a bit higher intraday. Okay, I'm just gonna be on for like 10 more minutes or so until the lunch. See, maybe there's an opportunity to take a quick scalp. I have a $50 position size here. Or see if it gets pulled back anywhere. Momentum is strong this morning, I'll say that. Okay, check this out. We're getting a bit of a pullback. The psychology of markets is short paper. Let me just read this real quick. Markets are mechanisms. Markets are not mechanisms, they are mirrors. Every price is a collective verdict, not on the value of an asset, but on the aggregate psychology of every participant who holds or refuses to hold it. To trade well or to make sound decisions with capital at stake, you must first understand that you are navigating a system of numbers. You are navigating a system of minds, including, most critically, your own. The following is not a trading manual. It's a map of the psychological terrain that underlies all markets, all risk, all durable success within them. Master these concepts, not as theory, but self-knowledge, for this is what they ultimately are. Okay, cool, great, awesome. The crowd is right during the trend and wrong at both ends. Oh, that's interesting. Markets have no memory. A stock that has fallen 5 days in a row is not due for a bounce. Right here. A strategy that has lost 6 trades in a row is not overdue for a win. Each event is largely independent of the last. Expecting reversion based on the sequence rather than structure is not analysis. It's superstition. Okay, cool. Well, the SPY is still pushing here. It doesn't look like it wants to put in much of a pullback, but even a pullback right here isn't the best entry point. Well, we got lunchtime in about 7 minutes, so I'm just chilling for a minute. Just wanted to test this out, see how it works. Okay, so what else is it saying? Capital is psychological, risk is personal. Money has no inherent meaning. Its meaning is assigned by the person holding it, shaped by their history, their identity, their fear. This is why two traders can execute the identical strategy with the identical parameters and produce radically different results. Strategy is not what differs. Their relationship to capital is. Psychology and behavior. The size of your position is a psychological statement, not just a mathematical one. That's good. This is why position sizing is the most underrated discipline in trading. It's not merely a risk management tool, it is a psychological management tool. Sizing that exceeds your emotional capacity, however sound it may be in theory, will break your execution in practice. You will exit too early. You will freeze at the wrong moment. You will make the decision that relieves emotional pressure rather than the decision that serves your strategy. It's important to know, to recognize when we're trading with the $50 account, trading SPY, which is what I'm going to be doing here. I have a whole other document that's just around this, around the idea of trading with $50 and or $500. Either way, it's like the same thing. They basically are nothing. They're both basically nothing. But the point is not about your size, just as it says. Here, the size of your position is a psychological statement, not just a mathematical one. So, you know, with a $50 account, psychologically, every 1% is the same. Every 10% is the same. So the feeling of losing 10% of a $50 account may be similar to the feeling of losing 10% of a $50,000 account, just because you're losing 10%. The dollar amount is probably less significant emotionally and psychologically. And that's the differentiator. Math is cool, math is great, but it's more about psychology and about knowing your own self, your own limitations, your own risk appetite. The ability to do nothing when nothing is the correct response is one of the rare skills in the markets. That, yeah. That's Sigma is Markets generate overwhelmingly quantity of information. Almost none of it is signal. Most of it is noise, random variation, narrative drift, and reflexive reaction to other reactions. One of the defining skills of any successful trader or capital allocator is the ability to distinguish between the two, to know when information demands a response and when the correct response is stillness. Signal is information that changes your probability assessment of an outcome. Noise is everything else. The challenge is that noise is often louder, more emotionally compelling, and more socially validated than signal. Financial media by design amplifies noise because noise, not signal, generates engagement. The trader who consumes financial media as information is in most cases consuming anxiety as their strategy. And that's why I like to say all you need is your intuition and the price, the chart and your intuition. I know people have some qualms with that kind of mindset because it can be potentially destructive. All right. Well, it's about to be lunchtime. There's nothing happening on the SPY here. It's flagging out off this breakout again. It's all right. Tomorrow, hopefully I can take a trade with this $50 account tomorrow and get it going. That's going to be slow. The market will always be smarter than your last best idea about it. The invisible hand. Anyway, let's see. Okay, so what time is it? About to be lunch. Yep, great. The opportunity would be to take a 687 call right now, or a 688 call actually for 50 cents, which is what I would do, but I don't really know. 688 call is about 48 cents. We're in a nice little flag, but I don't know if it's worth it to me in this situation. I would have wanted to wake up earlier and get this going earlier so I could capture the gap fill that we gapped down over 1%. We filled the gap in. Now we're going above the previous day close. Anyway, so that's just a little simple there. It's lunchtime now. I'm gonna go make some, I don't know, I'm gonna go make some toast and some avocado toast actually. We'll continue this tomorrow with the I'm going to be trading $50 account, $50. Trading only SPY. Being very diligent and see what I can do with it. I'm going to post it on my Twitter, post it on X, and pretty much share every trade that I take here on this account. And if it fails, then we'll do it again with 500. Either way, it doesn't really matter. I have a little bit of time to mess around. But I got to take this small account serious so I could not lose it. ideally. I don't even know if the audio here is really good, honestly. I don't know if I'm talking too quiet or loud. We'll find out, and I'll fix it later. So have a good lunch. Have a great rest of the day.